Tuesday, May 16th. Market analysis. Good morning, Stan Ehrlich. It is currently about 10:18 California time, a little bit past the middle of the day. And I always start out with stock market indexes. I have a new format that I'm experimenting with lately. So I'm going to show you not only the indexes, but some really great ER signals and trades. So you get a feel for how it does what it does, and maybe why it does what it does. The S&P candlestick chart on the far left, daily data, I'm only showing you a couple of months, which is going nowhere. This is very unusual. You can actually make a case for a bit of a pennant formation, which gets squeezed into a point. Historically, they break out usually around halfway to 2/3 of the way toward the end of the pennant formation. And they usually break out in the same direction that they were trending before the pennant formed. So the implication is bullish. But there are other interesting situations developing. We have, and I outlined on a different chart, a small head and shoulder top, and it is only 6 weeks or so in size. And here it is. There's your shoulder first on April 18th. Then you've got May 1st for the highest high. And just a couple of days ago, the potential last shoulder. Now, the neckline is almost flat, which is very unusual. On head and shoulder tops, that usually slant upwards slightly, and vice versa. So almost exactly 403 is the breakout neckline. And if this is going to be a bearish pattern that's going to work, we should not be dilly-dallying anymore around here. We should be heading down into new low ground below the lows of the last 4 or 5 days, which is going to, for one thing, come down and potentially close that little gap from this little pseudo island bottom that we had on May 4th. Now, there's other support levels on the way down as well, plus the fact that the downside objective is not that severe. It's not a very vertically large head and shoulder top. So measuring the minimum downside objective, we don't get a big deal out of it. In fact, it's not enough to change the overall trend of the market since October 13th's whopping great ER buy signal for October lows, and what has been so far the beginning of the bull market for 2023 and the end of the bear market for the previous year, 2022. Now, very important as to which direction this thing starts to break out in. So we're going to make new highs for the last few weeks. And if that happens, you're going to make new highs all of a sudden going back to August, which is what the QQQs have already done, by the way. So it's not very far away. 418 approximately does the trick. And we're at 11 at the moment. This could happen theoretically very, very fast. Remember, we're used to seeing 10 points, even larger than that, net change, let alone high to low, for a day. In the last several months, sometimes fairly frequently. It was only March 10th when we saw days like that on the way down. They got oversold and we turned around. So this is about to explode. We're going to see a move up or down that's very significant. Now, if it's on the downside, you've got this pattern, and it's going to move it down into other support areas and other trend lines and other reasons to believe that it should turn around and go back up again. If it doesn't, then we have a major long-term bear problem at hand, and the levels to break below for that to really be a problem is 380 and under. But we're much closer to the bullish story, and that has been intact since October 13th. That is what I expect. That's what I'm looking for, a bullish upside breakout. And all we need to do is start to poke our head above the highs made on May 10th, and that would be above 414.5. Closing above that, I think we're on our way up. Okay, let's look at the DIA. That rhymed. It's essentially the same thing, except that we have a downward slanting instead of sideways movement, and it really hasn't done any damage on the daily data chart. But we have had some slow deterioration. The highs on these last rallies haven't been as close to the previous ones, etc. And we did make, well, that's about it. I mean, this could still very well be a big flat trading range before a huge bullish breakout. But on the other hand, we need to maintain steady levels and start to make new highs. Again, if this starts to break down, I'll be screaming bloody murder about being bearish, but I can't do that. I don't see that. I don't expect that. I'm looking for new highs in the days and weeks to come for all the indexes. Maybe not the 2000, but at least, hey, look at the cues here. We have already today, and we're still there, made new highs for many months, all the way back to August. And we're about to make, it's very close to making, and we're not overbought yet, new highs even earlier than August 16th. And that would be new highs since April of 22, way over a year. That's how bull markets act. And of course, we got the October 13th, fantastic bullish engulfing. This, the QQQs, is doing an outstanding job of continuing to work its way higher. There are minor reasons to believe it could back up a little bit for a few days and take a little rest. But there's too many reasons to believe that if that happens, it's just a minor dip in a bull trend. Okay, let's go look at some unbelievable stuff here in the silver. We have on the daily data chart on silver a double top, pretty standard size, about a month. Both highs, which are extremely close together price-wise, are bearish engulfing in overbought territory, ER sell signals, and that's why it turned red. I got a double top with both highs having sell signals. A couple of days later, after the last one on May 10th, only a few days ago, we got a complimentary, quote unquote, I'm not charging you for that one, new sell signal, the third one, and oh my God, it just collapsed the next day. And today is a new low and likely a new low close for the move down since the double top and the sell signals. What can I say? Don't have the equity plot on this particular chart, but this is a short in the neighborhood of, just a moment, at least 26. And we're down at 2380. So great trade. And I'm going to be hard pressed to duplicate that real quick. And this is a great one. And of course, the 1 minute chart is the big chart on the right, and we're bouncing off the lows just slightly, but we're down quite a bit, 0.41 for the day. How about SWK? We've had unbelievably three bearish engulfing ER sell signals in the last, what is that, 10 days? Something like that. And today is the lowest low, period. And we're bouncing at the moment. But I want to drag you through this for a moment. I'll squish the chart horizontally, and I'm going to start to pull the data to the right on the 1 minute. Way over here is where we got originally short at the top of the rally, and that was at this price right here, 86.54-ish, and the entry is, just a moment, I had something wrong, 86.52, and we're short from earlier than that. Oh, I know why. It's because they're opened higher, I'm sorry, above the offer at 87.37. And yep, that's exactly where the 1 minute data tells me, 87.60-ish. Yeah. Great. Okay. The yellow dotted line is our STS. That's a smart trailing stop. So as the market is moving over time, our stop automatically comes down closer and closer and closer to the price action, and we are still short. This is a $923 trade at the moment. That's a whopper in, I think, 9 days, 8 days. Next symbol, IPG. Just recently, we had a buy signal on the daily data chart after being oversold and leaving another one of those little pseudo island bottoms behind. That was the first indication the market was, well, second. Oversold is first. Then the pseudo island bottom said, up we go. And we are. And it got a buy signal in the interim. So we got in on a lower opening a couple of days ago on the 11th. And our STS has jumped and is now protecting a great, well, did protect a great profit. And 2 days ago, we got stopped out with a profit. So now we're flat in the market's trading somewhat below where we sold out of our long position. That's exactly what you want. PRVA. Oh boy. We got short almost on the high day. The signal was the high day. And if I'm talking ER1, we're short on the high day. But I'm not showing you that. I'm showing you ER3s. And the ER3, I'm going to move to the left here. Sold it right there. And the stop was initially there, but by the end of the day, it already started to come down because prices did. But we use a variety of tools to move our STS, smart trailing stop. And we almost got stopped out the next day, but did not. And then it started to come down again and several times on the following days. And we are still short $378 profit on this $28 stock in 5 days. ZM, my last little example. Sorry to do this. Futures are next. And we got some great stuff going in futures today again, besides silver. Wow. All right. ZM, oversold. Buy signal a couple of days after it started to come out of the oversold condition. The green dashed line is our trigger to buy it at that price. It came down almost to, I think it was to the exact tick, but it didn't last for a couple of hours. And then we were a little bit of a loss for a short period of time. And then it turned profitable. And again, it turned into a little bit of a loss for a short period of time. And it just plain took off in our favor. So our smart trailing stop was initially here and started to rise with prices to protect less of a risk and eventually, and now, a profit if that stop is hit and filled at the price. So we're looking real good. This is $188, 100 shares, one round lot on ZM in 1, 2, 3 days. And that's it. Let's go to futures. S&P 500 is not only an E-mini futures contract, but also, of course, an index. And again, we're going sideways, doing nothing today, just waiting for a breakout. Next chart. Bonds are breaking their support level, not at the moment on a closing basis. This is how false downside breakouts look. If we can rally just a little bit more, all it has to do is close above those previous lows in the last couple, 3 months. And then we have a new low, but not a close below the previous lows. That would be considered a possible false bearish breakout. We'll see what happens for tomorrow. But I would much more be interested in being a buyer here with a very, very tight sell stop than anything else. Unfortunately, we're not oversold. If we were, I'd be much more aggressive about my comments. But anyway, this should be a very, very low risk bull entry. No signals. I'm very bullish on bonds long term, and this should be starting to go up. Maybe we do have another correction, a little downside slippage. Oh, low 26, 27 something soon, and then up. 10-year notes. Support has not yet been challenged around 114, but we're not far. We are slipping like the bonds, but they're holding up a little bit better relative to previous bottoms. So still the other comments apply, long-term bullish period. Crude oil, sideways today, not doing much of anything. Long-term trend is down, looking for the 65 level to be broken and for it to head lower again. Next, heating oil. Basically, same comments, no change, no signals, neutral territory on RSI, looking for new low ground, and it will be a whopper of a bearish breakout once we start getting, and I expect that to happen soon, maybe even this week. It's just Tuesday, below 214. Next chart. We're looking at natural gas. We had a buy signal on Friday. We almost bought the exact low of the day on yesterday morning. Almost the exact low of the day. We are higher at the moment on the day, and today's high is significantly higher than yesterday's high. And the low is certainly not a very minor amount lower than the previous day's close. This is great. It's working perfectly. There's nothing wrong whatsoever with the way the strategy is acting. You had a loss for probably a few minutes, and that was it on this trade so far. And you got plenty of opportunity to raise your stops and take profits or tighten up, so you shouldn't take a loss. Next chart, gold. Remember gold, silver, and platinum? We bought all three of them in late February on the lows day. We have green bottoms on all three of them. This is gold. We're having trouble. I've mentioned that for weeks now. It's a big down day today, and it's starting to challenge that significant support area. So if we start to break below 1,979-ish, that could be a very bearish breakout. Excuse me. Should be a very bearish breakout. So I'm kind of expecting that to happen pretty soon. Next, look at this. This is the silver again. I showed you a little earlier. New lows, new low closes, closing, well, at the moment around the previous low, but it's way, way well on its way on the downside. But the problem is we're oversold. So at any time, you could see a rather, for a long-term bear move, healthy rally. Bear markets don't go straight down. They do go down a lot faster than bull markets go up. Absolutely. I think the name of the game is approximately 2 to 3 times faster they go down than bull markets go up over a time period. And in my 52 years in the business, hell yes, they do that. All right. So silver looking good. And next is platinum. We also got the bottom of the market on platinum. Going back to silver, just showing you that one. Silver, we got the bottom on that one. Now, on February 27th, we got the bottom in platinum. Platinum gave us a sell signal to work for a few days. It then had too much strength, and we had a small, short-term, bear profitable trade. Right now, no new signals. Double top formation possibly, in the ballpark of significant historical resistance, back where it topped out approximately in January. I think we're going to see it start to close below 1,039, and that'll be a minor downside breakout and probably give it enough downside momentum to get down to, say, 940, low 940s. Next chart, high-grade copper. Yep, that's heading south, Tierra del Fuego. No change of opinion. Trend is down now, and it's been down since the beginning of the year. I think it's going to bounce off of various support levels on the way down. Next one could very well be 3.58. That's what it looks like it's probably going to be. New lows for soybeans and a significant bearish breakout. This is a new low and a new low close in soybean futures since October, the end of October last year. It is entering a wide variety of support levels, all the way down to 1271, and we're 1360. So there's a lot of elbow room between here and major final support. And today we begin to get oversold again. So that's why we're turning yellow again on the daily bars. So at any time it could bounce a little bit, but I don't expect very much of a bounce. I do expect lower levels. I'm bearish. What can I say? Next chart, bean oil. Same story. It's actually leading the way down. We have new low and new low closes since February of 22, year and a half. and it's getting oversold rather significantly. We're about to turn around. This is about to bounce. I feel pretty strongly about that, and we are coming close to some major support levels, which is going to be about 42.5-ish, if we can get down that far. I think it's highly likely to bottom out between here and 42.50, and soon, this week. That's interesting. The first time I've said this. Notice we got a bottom on green ER buy signal on 12/15/21, a whopper of a long-term bullish buy signal. It's a great one. We had a sell signal right there. We had some sell signals on that rally high, and we had a buy signal on the bottom right there. We might just have a green buy signal, an ER bullish engulfing oversold buy signal coming up soon. I wouldn't be surprised. It's got oversold conditions now. That's exactly what I need for a starter. Next chart. Look at the soybean meal. Got oversold, bounced a little bit, and now we're seeing new low closes probably for the last few days, and very close to the last low in a bear trend, at least for the last couple of months, March, April, May. So I'm not, is that a trend, 2.5 months? Some people would say yes, some no. I'm trying to tell you, you should define the time frame you're talking about when you use the word trend. Are you a scalper, day trader? The trend might be 2 or 3 hours. But if you're a swing trader, it might be a week or 2 or 3. An investor might say the trend is for 6 months or a year or more. You see my point? Depends upon the time frame you're talking about and what kind of trading you're involved in. So I was specific. For the last 3 months, we've been trending lower. Prior to that, something else. Up, obviously. Next chart. Corn. Got the bottom of the break. Modest rally. Not developing the way I was hoping it might. This is probably going to make new lows soon. Going below 569 is going to be a significant downside breakout. Another quote-unquote nail in the coffin. And if you're bearish, that's good news. And I happen to be bearish. I'm looking for new lows. New chart. Next chart. Wheat. Same comments here. You do get buy signals in a bear market. They don't work very well. They may work okay for a week or 2 or 3 or 4, but the trend being down, and I said it was a bear market, you want to trust the bear sellers, can't talk today, the bearish sell signals more so, and take better, quote unquote, more maybe aggressive advantage of those signals in the trend. So here we still have a bear trend, obviously, and the buy signals worked a little bit for a few days in both cases. But right now, it looks to me like we're going to start to attack the lowest lows and make new lows again. This is wheat. We sold the top of the market at the beginning of the war to the same exact day. We had another major sell signal with a huge decline afterwards a few months later. Next chart. Live cattle. Buy signal near the bottom. Sell signal near the top. At the moment, the rally's a bit more than I would expect. I'm waiting for a little bit more evidence. The major trend is obviously up. The buy signals, past tense, worked extremely well. The sell signals didn't work at all or very little, just exactly what I said a few minutes ago. So I'm forced to be bullish intermediate to longer term, but will there be another downside correction? I can't tell at the moment. Next chart. Lean hogs. We had a buy signal a few days ago on the 9th. It's doing just great. We have a new high and a new high close likely today since then. Still looking for higher levels. One comment about the ER signals. They only tell me that the market is probably turning around because of the red and the green daily bars and the signals. They don't tell me how far the market may move because of the buy or sell signal, or they don't tell me how long it's going to last. So I use other tools to try to find out an answer to those questions. but the signal is built to tell you, hey, there's a damn good chance this is a very important day. Next chart. OJ, bull trend, came back to support, starting to head higher, looking for probably a test of the upper resistance levels and maybe going in a new high ground. Next. Bearish engulfing sell signal in cocoa 2 days ago. On Friday of last week, I screamed bloody murder on that day. Yesterday, we went down a little bit, but not very much, closing a little above the open and closing near the high of the day. And this morning, we are able to get up high enough to get our ER3 short signal on the books. We sold it short near the high of the rally today. This is a profitable trade, ER3 short at the moment. Our protective buy stops are in place. We know our risk, and we're expecting to see lower levels. Let's see what happens tomorrow. Sugar, the sweet, having a lot of problems at this resistance area. I alluded to a potential double top, and now it's going to look something different if it starts to head south. But it needs to close above these highs in order to start another major leg up. Right now, a little bit of a problem. Next chart is back to E-mini, slipping off a little bit, now down $1.50 on the E-mini. I will go back to the spider where we started real quick, and it's just dribbled off very slightly here while I yak away. You have a great day. See you tomorrow.